the first thing we're going to talk about and just kind of get everything going is talking about the U.S. Tax brackets and how this works, right? So the way I like to do a lot of my activities and exercises is that the best way to fully understand something is if you're able to teach it to someone else, right? So that's one of my main emphasis of my teaching and my training. And if you're able to teach someone taxes in a very simple way, then that's pretty much the main goal here. Okay, so quick question. I did this at a hotel last year. So can you teach how the U.S. tax brackets work to a hotel staff, right? So this is going to be one of the activities that we're going to be doing, is trying to figure out how do we come about explaining U.S. brackets to someone that has no experience in taxes whatsoever and no experience in accounting or finances either. I'll go through my explanation of how I actually use this visual with the clients on how to explain U.S. tax brackets, okay? So the way you want to imagine it is that there are buckets, and each bucket is going to be what is taxed in that bucket. So the water represents the income coming in. So if it fills up this bucket, then all the income that's in here is taxed at 10%. And then if they make even more income, then it goes into the next bucket, that will be taxed at 12%. So they call it a progressive tax system where it keeps on going up higher and higher, right? So it's not where if they make, say, $100,000, not all their income is taxed at 22%. Only a portion of it, so the first $11,600 is taxed at 10%, from $11,000 to $47,000 is taxed at 12, and then so on, right? So this is a common misconception that a lot of clients have, is that because they think that they're in this, say this bucket, they think that their whole income is taxed at 24% flat, when it's really not. Like a portion of it is taxed at the lower rate, and it goes up, okay? So what I do is, if there's an example of $140,000, these buckets get filled up. So this amount is going to be 10%, 12, and then the little bit that goes into the 24% bracket, only this portion is taxed at 24%, while the rest is taxed at the lower rate. Okay, so very important that clients understand how this tax brackets work, because there's a misconception that people think that if they take a bonus and it fills up their bucket and goes into the next bucket, even if it's just a little bit, they think that the whole thing's taxed at the next bucket, which it's not that way, okay? It's somewhat fair for the IRS. So it keeps on going up, and then for this case, this is a filing single person. Once income is over $609,000, then it's just taxed at 37% for everything above that. So this is the example I gave earlier, is if their salary is $140,000 and that income is at the 24% bracket. If they took a $50,000 bonus, that means it's going to push them into a 32% bracket. So the client will say, hey, if I accept this bonus, my taxes will go up a lot higher because now I'm in a higher tax bracket. My entire income will be taxed at 32% now. And then it's actually false. It doesn't work that way, and that's how we go through that, okay?